Thanks to everybody for watching. The story with Calima really goes back into 2014 when they gained an interest in the Montney. And then in 2017, Calima and the team in Australia farmed in on about 72,000 acres of Montney acreage up in northeast BC, up here in lovely Canada. So the team assembled here in Canada in 2018. The Australian team partnered with, or took out their partners to become 100% operator in all of the acreage up there. And so then the winter of 2018 to 2019, we executed a drill program up here locally, where we were able to drill 3 wells. The first well we drilled was an exciting vertical strat test well where we cored 240 meters of Montney Formation. So a nice thick slab of rock up there in the Montney Formation. And then we went on to drill 2 horizontal wells, one into the upper Montney Formation and the other into the middle Montney Formation. And those wells had horizontal legs of about 2,500 meters in length, and they had a multi-stage completion where we injected large volumes of water and sand into the formation to help fracture it open and produce the gas and liquids back to us. Then in the latter or middle part of 2019, we were able to obtain a reserve estimate report from McDaniels and Associates. They're a leading reserve auditor up here in Canada. So we pushed that reserve report out middle of last year. And then we went to work on obtaining permits necessary to tie our Montney wells in. So we were successful in obtaining the pipeline permits to tie in about a 20-kilometer tie-in point to the nearest infrastructure. And the cost that we've put together for that is around $25 million for the pipelines as well as the facilities necessary to tie in. Then in the first part of 2020 here, after months and years of negotiation, we were able to acquire the infrastructure to the north of us that we were looking to tie into, and we refer to that as the Tommy Lakes infrastructure. We'll talk about that a little bit more in detail as we go further along. But what this really does is it sets Calima up for being development ready. So we have permits in place and an infrastructure in place that allows us to tie in our gas and liquids rich gas, the condensate production, into the local infrastructure, the sales gas line, if you will. So it puts us in a position where we can determine what the next steps are, allowing us to get into production. What does the partnership look like? What does the finance look like? What sort of opportunities do we want to pursue to bring this Montney acreage on stream and on production? And we have a bit of time with us here to determine when is the best and most appropriate time to bring that on. From kickoff, we're about 6 months out to be able to tie these wells in and bring everything on production. So it's a positive story and puts us into a good position for the next steps. So trying to work too many screens here. There we go. So as I mentioned before, the Calima story really began back in about 2014, and it was a bit of a geological exercise in that the team had found a sweet spot of liquids-rich gas acreage available up in northeast BC. It had been somewhat overlooked. There was concern that it didn't have enough pressure, wasn't overpressured, and that there was no liquids in it. And through the drill bit, we were able to prove that it is overpressured, and that we did indeed have some really nice high API condensate associated with our gas production. So we executed that over the winter of 2018, 2019 out of Canada here, out of Calgary, with some strategic allegiances with some excellent contractors. So we were able to pull this off with a really small team here in Canada, given the size of the exercise that we went through. As I mentioned before, the development is now sitting in a ready project, waiting for that next decision to proceed. From an environmental and social responsibility perspective, Canada, we take a lot of pride that we have strong environmental performance here in Canada, lots of regulatory oversight into how we execute on industrial projects here in Canada. Other thing to note is the invested executive team on the project. So the Calima management team has chosen to take shares instead of their directors' fees, as well as a number of us on the management team are also taking shares instead of pay, so that that allows us to keep a little bit more money in the bank and helps to maintain that cash. And then the other thing to note is that in the last rights issue, the management team heavily invested in that as well. So the management team is quite heavily tied to the success of the Calima story. So the next slide here talks about, running the two screens again. The next slide here talks about where Calima is positioned in Northeast BC. As you can see, we've got some pretty healthy neighbors to the south and to the west of us: Tourmaline, Black Swan, Petronas, some of the larger players in the gas space up in Northeast BC. Petronas is one of the large partners in the LNG Canada facility, so one of the anchor positions up in Northeast BC. Tourmaline just acquired the Polar Star acreage up there and some other Painted Pony acreage. So we're starting to see a bit of an aggregation of acreage in Northeast BC. The M&A space is starting to see a bit of traction, a bit of movement, and we were starting to see some deals here pre-COVID. So hoping that we're going to see some more movement on that space. The other thing to note there is the Tommy Lakes infrastructure that's identified on the north end of the map. So we have, that's the infrastructure that we acquired. It's the nearest infrastructure to us. It ties into a North River midstream sales gas line and takes us down into some of the other hubs there, Jedney, into Aitken Creek. And that's one of the major hubs that allows gas to exit the area. As I mentioned before, McDaniels provided us with that maiden contingent resource estimate of 1.176 T's of gas. So we found a fairly significant amount of gas up there. McDaniels is working on an update to that resource report for 2020. We're seeing changes in pricing on strip pricing of gas. We also now own the infrastructure that we were tying into, so that gives us a bit of flexibility on how we want to manage and operate that. And then it also, there was also a change in the number of acres that we held. We did allow some of the fringe acreage to the north and west of us to expire, feeling that it wasn't part of our core acreage. So what we've got in front of us now is our core acreage. And then through the drilling of the 3 wells that I mentioned last in the winter of 2018-2019, we were able to convert 60% of that core acreage over to long-term lease. So we have a 10-year lease on just over 33,000 acres of mineral rights. There's got a bit more time there. And then the other leases do have some expiries over 2021, 2022, so a little bit out in the future here. The wells that we drilled in 2018, 2019 did test out as top quartile wells. We were able to book a reserve, an estimated reserve of over 8 BCF a well, which, given the time and the completion techniques that were out there, most of the other operators were booking in around 5.5, 5.6 BCF EUR per well. So definitely a top quartile wells that we were able to execute on. The Tommy Lakes infrastructure, as I mentioned, we'd originally started negotiating with the owner of that asset back in 2018 to tie our gas in, and we'd gone down the path of a tie-in agreement. And then the owner of the infrastructure chose to exit the area. It was a older end-of-life field, a halfway doig field, so a formation that was higher up than the Montney acreage. Quite a similar gas makeup though, and capable of handling the liquid. So it was a natural fit for us to tie in our acreage into that facility. But then the opportunity came up for Calima to take that over. And so we entered into that agreement and closed on it in April of 2020. The field was shut in, the asset was shut in over the course of the winter and sits in a dormant state right now. So we're preserving it, we're maintaining it as required to ensure that the facilities are ready and available to turn on when we make the decision to tie in. Through the acquisition of the Tommy Lakes infrastructure, we acquired approximately 30 kilometers worth of pipe. We acquired 3 compressor stations and a campsite. the replacement value of these assets is north of $80 million Australian dollars. So it's quite a significant asset, and we were able to acquire it for the cost of the shut-in essentially. So it has an annual holding cost of around $400,000 while suspended, and the permits are still in place for these facilities to turn up when we want to turn them back on. The other piece is that now that we own the infrastructure and we own the pipelines, we can look at how we want to manage and maintain it and operate it. So we're exploring what sort of cost savings there are to reduce some of our original pipeline costs and size and length estimates to be able to tie into some of the other infrastructure that we now own. So we're going through the modeling work there to determine what sort of cost savings exist and what does a full field development look like, working through with McDaniels. So on the next slide here, my apologies. The Canadian side of things, admittedly, the Canadian markets have been a little punished, if you will, for the last number of years. Canada was late to the start on the LNG side as well as on the pipeline side. It appeared that we had trouble as a nation getting industrial projects over the finish line. We've seen a change in that. We now have a provincial and federal government that are backing significant projects here in Canada. The Trans Mountain Pipeline is an oil sands pipeline that'll take product to the West Coast. And then we have the Keystone XL pipeline going down into the US. So these projects were backed financially by both Trans Mountain by the federal government and Keystone by the provincial government. So showing a strong support to the industry and strong support that these projects will get built. They are currently under construction, and we're going to see some additional production on stream here soon. On the LNG front, at one time, Canada had a number of LNG facilities proposed on the West Coast, and that was slow to kick off, but we now have LNG Canada. They made their final investment decision on that project. It's being constructed right now. We're looking at having an on-stream delivery of 2024 for that one. And we also have Woodside and Chevron following suit with their Kitimat facility. We're optimistic that we'll see some final investment decisions on those projects here in the near future. So the West Coast of Canada does have some strategic advantage for the Asian market as far as the distance and time, and then being in a colder climate, there's efficiencies on how LNG is converted here, just given the colder temperature that we deal with, as mentioned on that first slide with the snow on it. The other piece to note is that the carbon footprint of the LNG produced out of Canada will be the lowest in the world. One of the major reasons for that is the LNG will be powered by hydroelectric powers. BC government has put a lot of energy and money into investing in hydroelectric power, and so that grid system will be powered, allowing us to deliver CO2, the lowest CO2 LNG on the globe. So a good story there for LNG. So on this slide here shows the AECO strip. The AECO hub is essentially the hub for gas pricing out of Western Canada. What we've seen over the past 12 months is that the strip pricing has gone up over $1 year over year. So strengthen that strip pricing, and the parity between Station 2, which is historically where the BC gas goes, is essentially they're running the same, where historically the Station 2 pricing would have traded at quite a differential. The last slide here is around operational objectives for 2020. So this gives us an insight as to where we're going for the year forward. We're looking at that Montney acreage and looking at the Tommy Lakes infrastructure, deciding how we want to develop that forward. We're pursuing partnerships with other developers here in Canada, other operators, to see how can we work together to see this development of this Montney acreage come together. And then the last piece here is around the new ventures. There's great opportunity in the Canadian space right now, so we are looking at what sort of opportunities at the bottom of the cycle could be had to bring additional production into the Calima story. And then the last thing I'll note on that slide is the current capital of the organization. So we're in a good cash position to float for the next 18 to 24 months, as we've done a great amount of effort to reduce our burn over the last number of months. So the last slide I'll leave you with here is the operating team. So myself and Aaron are up here in Canada. Mark and Glenn are down in Australia, and then those are the two gentlemen that will be available for meetings throughout the course of the Lands of Money conference.